Well, it looks like a tough quarter for Ford. The company reported a big drop in first quarter profit. It fell 39%, well short of analyst estimates. The automaker blames warranty expenses and, of course, the bad weather. Our car guy, Matt Miller, is standing by with Ford CFO Bob Shanks. Matt, I'm going to send it to you.
Thanks very much, Eric and Stephanie. Yeah, CFO Bob Shanks joining us now from the Ford Motor Company. Bob, thanks very much. Let me start off by asking you a question. A lot of people have been calling this today the kitchen sink quarter. Was it that where you moved forward as many negatives as possible into the first quarter to get them in one place and out of the way for the path forward?
No, absolutely not. This was a solid quarter for us. We were affected by three factors around exchange rates, weather in the U.S., and warranty reserve adjustments for field service actions, which is just part of our normal process. And we're well on track to our guidance this year of a $7 to $8 billion profit. It was a solid quarter for us.
In that case, how come analysts got it so wrong? I mean, what were they looking at? What were they missing, not looking at, that you guys did?
Well, on the positive side, we actually came in stronger than what was expected, much stronger than expected, frankly, in Asia Pacific and Ford Credit. The loss in Europe was better than what was expected.
But Bob, I'm talking about the EPS.
In North and South America.
You posted an EPS ex items of 25 cents. The street was looking for 31 cents. Why didn't they get it right?
We had a little bit more bad news on the balance sheet exchange effects. We had guided to about 300, 350 in Venezuela. We also picked up some bad news in Argentina. We had the weather issues, which was about $100 million, and then we had the $400 million warranty reserve adjustment for field service actions in North America. So that's the part that they missed.
Let's talk about that warranty reserve adjustment. What exactly how does that $400 million break down? Are you planning for future costs? Is this for issues that happened in the first quarter?
Yeah, it's not for any particular problem or action. We actually reserve for field service actions with every vehicle that we sell. So we have a reserve on the books, and then what we do, it's based on history. As history changes, either up or down, we we make adjustments to the reserves twice a year, first quarter and third quarter. So it was a typical adjustment period, if you will. And based on the history that we've seen on product recalls and such, we had to top up the reserves, and that's what occurred in the first quarter.
Would you say you're trending to a more conservative path as far as taking reserves are concerned, given what's happening in the industry?
No, absolutely no change whatsoever. This is a process we've been following for years. Sometimes they go up, sometimes they go down. This was an upward adjustment, obviously, and it was just per our normal process.
Let's talk about the weather for a second. You know, we make fun of everyone who's concerned about the snow in winter. But I know firsthand that you guys had some delivery problems as my F-150 came a little bit late. How do you get to $100 million, though, in weather costs?
Yeah, it's split about 50-50 between premium freight and logistics costs to expedite parts from our suppliers because they were affected, as were we. So to keep the plants running, the lines going, we had to kind of expedite delivery of those components. And the second is labor and overhead. To make up production that we lost, we had to pay overtime costs. We also had higher energy costs because of how cold it was. And so all that together brought us that $100 million hit related to the weather.
Let me ask you, you know, I was listening on the call and I heard you say and show the slide for net cash of $9.5 billion. It seemed to me, compared to GM, a little bit light and compared to where I know Ford usually wants to be. Do you have plans going forward to beef up the cash?
Well, if you look at the gross cash, including marketable securities, I think GM was about $27 billion. We're at $25.2 billion. So the absolute level of gross cash and marketable securities are actually quite similar. When you go down to net cash, I forgot the GM number. It perhaps is a bit more than ours. I don't remember, but it's not materially different. And the $9.5 billion is sort of the level that we've been in. So it's a very strong level of liquidity. And then on top of that, we've got about $37 billion of committed credit facilities that aren't tapped into at all.
Well, and, you know, while we're talking about things that were positive and strong, automotive operating cash flow, I noticed, up to $1.2 billion. And I think you mentioned it's the 15th quarter in a row or 16th quarter in a row where you have a positive figure there. How key is that figure for people that haven't taken Accounting 101?
Well, that's the blood of the company, any company. So I think the fact that we're still generating positive cash flow despite what's happening in emerging markets, despite increasing investments for future growth, which is what all of this is all about. This is a setup year, if you will, for stronger results in 15 and beyond. I think that's very encouraging and just shows the earning power and potential of the company.
In Europe, do you see a real recovery there? Because I noticed you're only looking for 1% GDP growth. You have pretty stagnant market share. Does that look like it's getting better?
Oh, absolutely. Europe is clearly in recovery mode. The industry level is rising a bit faster than we had expected. We actually increased our guidance for the full year in terms of industry volume for Europe. Our share was up. And we're seeing positive results across all parts of our business. So we feel very positive about the turnaround there and clearly on track for a profit in 2015.
And China's obviously, you're growing like gangbusters there, coming from a lower bar than your competitors. But do you expect that rate to continue? Double digits, high double digits?
I think we'll still see continued strong growth. We still have 4 plants under construction in China. 2 assembly plants, a transmission plant, and an engine plant. So there's more capacity coming on stream. There's more products we're going to be adding to the portfolio. The products are being well received by customers. The brand is embraced by customers. So I think we've got lots of growth ahead of us there.
So Bob, all in all, with the exception of investors looking at today as kind of a negative day for the stock, you're set up really well for when Mark Fields takes over as CEO, right?
We are set up very well, not only for the balance of this year, but as I said, going into 2015. And I think we feel very strongly about the guidance that we've given. In fact, in the call, Mark mentioned that for North America, where we're guiding to an 8 to 9% margin, with a little bit of luck and some hard work, I think we might be able to get that towards the top half of that range.
Can you just give me a little hint as to when you're going to make the official announcement, Mark Fields stepping up?
No change to anything that we've said in terms of succession. So that's the news.